All right. SoFi Technologies stock.
SoFi.
That's what we're diving deep into today. You ready? To figure out if this is a buy, sell, or hold,
I think so.
we've got this Motley Fool article
Okay.
that's making some interesting points.
All right.
So let's unpack it together, shall we?
Yeah.
What do you think?
It's fascinating how SoFi wants to be a complete game changer in finance.
Oh, yeah.
They're aiming to be the ultimate one-stop shop.
Really? Just everything?
Yeah, for everything money-related, all online.
Not just trying to be another bank, are they?
Right.
It seems like they started at Stanford back in 2011, initially focused on making student loans more affordable.
Right.
But then they branched out
They did.
into mortgages, auto loans, personal loans.
Yeah.
It's like you're building a financial empire.
It is. It is.
All from your phone.
All digital, yep. And they're using tech, especially AI.
I was going to say, they're really leaning into the tech.
To grow way faster than those old-school brick-and-mortar banks.
Yeah.
In fact, they snagged a U.S. bank charter
Back
in 2022 and are operating as a full-fledged digital-only bank. That's a big deal.
That is a big deal.
It is.
It definitely makes you wonder, though, are they just getting bigger?
Right.
Or are they actually getting better?
Yeah.
The article highlights some pretty incredible user and product growth.
Yeah, they have.
They've tripled their members
That's right.
and increased the number of products people use sevenfold since 2020.
That's a lot.
That's huge.
It is.
It's a lot.
Those numbers are hard to ignore.
They really are.
It shows people are signing up.
Yeah.
But more importantly, they're sticking around and using more and more of SoFi services.
Right.
That kind of engagement points to something bigger than just a trendy app.
Okay, so the growth is there, but are they making money?
Right.
Let's talk financials.
Okay.
So SoFi's revenue has been growing like crazy. A 49% compound annual growth rate from 2020 to 2023.
Wow.
And get this.
What?
They've actually become profitable.
Yeah.
Their adjusted EBITDA,
Okay.
basically a measure of their core profitability,
Right.
turned positive in 2021 and has been climbing steadily.
That's the important part.
Yeah.
So this is where things get really interesting.
Okay.
So SoFi's success isn't just about attracting users.
Right.
It's about turning those users into a profitable business. But there's a catch.
Oh, there's always a catch.
They did miss some of their financial targets after a big merger.
Really?
Blaming things like rising interest rates and that whole student loan payment pause.
Oh, right.
Yeah.
Those external factors were definitely a curveball.
For sure.
And that leads us to the big question.
Yeah, the big one.
Should you buy SoFi stock, sell it, or hang tight?
Right.
The article presents some compelling arguments on both sides.
It does.
And we're going to break them down for you.
That's what we do.
Deep dives like this are all about understanding the nuances.
Yeah.
We need to look beyond the headlines and figure out what these arguments mean for SoFi's long-term prospects.
Absolutely.
Let's start with the reasons to be optimistic.
Okay.
The article suggests some of the challenges SoFi faced are easing up.
All right.
The Federal Reserve is now cutting interest rates, which could make loans and refinancing more appealing.
Yeah, I could.
Plus, that federal freeze on student loan payments.
Oh, right.
It's finally over.
Big news.
Big news.
Those are definitely tailwinds for SoFi.
Definitely.
Lower interest rates could boost loan demand.
Yeah.
And the end of the student loan moratorium could reignite a key part of their business.
Yeah.
It's like they've been given a green light to really accelerate.
They've been waiting in the wings.
Right.
And they're not just sitting around waiting for things to get better.
No, they're not.
SoFi is actively finding ways to grow without taking on too much risk.
Smart.
One example is their deal with Fortress Investment Group,
Oh, interesting.
where they underwrite loans, but then offload them to other lenders.
Okay.
It's a smart way to boost their fee-based revenue while keeping their own risk in check.
So they're not holding that risk.
Exactly.
Got it.
That move shows SoFi's adaptability.
It does.
They're not just chasing growth for growth's sake.
Right.
They're being strategic about it. That kind of thinking is crucial in a financial landscape that's constantly shifting.
Yeah. You have to be ready to pivot.
You do.
Yeah.
And then there's their subsidiary, Galileo.
Galileo, okay.
This is an enterprise-facing fintech platform that's absolutely exploding in growth.
Wow.
They provide payment processing and other services to businesses all over the world. Galileo is like a hidden gem in SoFi's crown.
I see.
It not only diversifies their revenue stream,
Okay.
but also taps into a whole different market, enterprise services.
Right.
This could be a major growth engine for them in the years to come.
Interesting.
Think about it. they're not just serving individual customers. They're powering the businesses behind those customers. It's a whole other level of impact.
Yeah, that's true.
And to top it all off,
Okay.
SoFi has been consistently profitable for the past 3 quarters.
That's great.
That tells me their growth might actually be sustainable, not just a temporary blip driven by risky bets.
Yeah, so profitability is the ultimate proof that a business model works.
Right.
However,
Oh,
we need to look deeper than just the headline numbers.
okay.
Are these profits coming from genuine efficiency?
Right.
Or are they based on factors that might not last?
Okay.
That's something investors need to consider carefully.
So we've seen the sunny side of SoFi,
Right.
but let's flip the coin.
Okay.
What are the reasons some people might be hesitant to invest?
Well, the biggest worry seems to be SoFi's valuation.
Valuation.
Even with all this impressive growth,
Right.
their stock isn't cheap.
It's not.
It's trading at 43 times next year's earnings.
Oh, wow.
Even though analysts are predicting a whopping 100% growth
100%.
in earnings per share.
That's a lot.
That's a lot of optimism baked into the price.
Yeah, and if you compare SoFi to a company like New Holdings,
Okay.
which is growing even faster in the Latin American market, SoFi's valuation starts to look even more questionable.
I see.
New Holdings is trading at a much lower multiple, around 26 times next year's earnings.
So that raises a crucial question.
Yeah,
Is SoFi's higher price tag justified?
that's a good question.
Do they have something truly unique that warrants a premium valuation?
Right.
Or is the market getting carried away?
Betting on growth that might not deliver.
Right.
Then there's the price-to-book ratio,
Okay.
which compares a company's market value to its net assets. SoFi's is way higher than traditional banks like Bank of America and Wells Fargo.
Really? How much higher are we talking?
We're talking almost double.
Wow. So it's important to remember, though,
Yeah.
that we're not comparing apples to apples here.
Right.
SoFi is a digital-first platform, and their business model is fundamentally different from those old-school banks.
Right. So their higher price-to-book ratio could reflect their growth potential
Yeah.
and their tech-driven edge.
Exactly. But it also means they're more sensitive to market swings
Okay.
and investor mood swings.
Another thing that might raise eyebrows
What's that?
is the 32% increase in outstanding shares over the past 3 years.
Okay.
When a company issues more shares, it can dilute the value of existing shares.
Right, like cutting a pie into more and more slices.
Exactly.
Each slice gets smaller.
Dilution is a valid concern, especially for growth companies
It is.
that rely on issuing new shares to fuel their expansion.
That's right.
Investors have to weigh the potential rewards of growth
Mm-hmm.
against the potential cost of that dilution.
It's a balancing act for sure.
And here's something that might make you pause.
Okay.
There's been significant insider selling over the past year.
Insider selling, what do you mean?
Insiders, the people who know the company best, have been selling way more shares than they've been buying.
Doesn't exactly scream confidence, does it?
No, insider selling is a tricky signal to interpret.
It is.
It doesn't always mean they've lost faith in the company.
Right.
Sometimes insiders sell for personal reasons, like diversifying their investments or funding big life events.
I see.
But when you see persistent, substantial insider selling,
Yeah.
it's a signal worth paying attention to.
Mm-hmm.
It could mean those closest to the company don't see much upside in the near future.
Okay, so we've got a lot to digest here.
You do.
Strong growth, impressive profits, but also a hefty price tag and some potential warning signs.
What's your take on all of this so far?
Well, this is why investing is more than just crunching numbers.
Right.
It's about understanding the story behind the numbers, weighing the risks and opportunities, and forming your own opinion.
Your own perspective.
Exactly. What might be a great investment for one person might be a bad one for another. It all depends on your individual situation,
Sure.
how much risk you're comfortable with,
Yeah.
and what you're hoping to achieve with your investments.
All right, before we get into even more detail,
Okay.
let's hear your expert analysis of everything we've covered so far.
Right.
We'll also explore some potential risks and opportunities that might not be obvious at first glance.
Sounds good.
Stay tuned. All right, we really dug deep into SoFi, haven't we?
Out.
From their ambitious start to their current financial performance, we've looked at the good, the bad, and the potential.
Yeah, trying to carve out a unique spot in the financial world is no easy feat.
Exactly. So what does all this mean for you as you consider SoFi as an investment?
Right.
Let's recap the key takeaways.
Okay.
There's no denying Their impressive growth and their transition to profitability is a major plus.
For sure.
They're also taking steps to address some of their challenges, like diversifying what they offer and finding smart ways to grow without taking on too much risk.
Smart moves.
On the other hand, that high valuation is still a concern.
Yeah, it is a bit.
The market is pricing them for perfection. So any stumble could send their stock price tumbling.
And we can't forget the competition.
Oh, yeah.
The fierce competition in Fintech.
Right.
To keep up with the innovation race. They'll need constant investment and agility.
We also talked about how AI could be a game changer for SoFi if they use it wisely and ethically.
Huge potential there.
And then there's the human element.
Yeah.
Investor psychology.
Right.
Perceptions and expectations can really move the market.
Oh, absolutely.
Sometimes even if the underlying fundamentals of a company are strong.
Psychology is a big factor.
So the ultimate question is buy, sell, or hold.
The big question.
That's a decision you'll need to make based on your own research, how much risk you're comfortable with, and your overall investment goals.
That's right.
But we hope this deep dive has given you the knowledge and insights you need to make that decision with confidence.
We hope so.
Here's a final thought to leave you with.
Okay.
Beyond the factors we've discussed, what other forces could shape SoFi's future? Think about the overall economic climate advancements in technology that might disrupt the industry.
Right.
And even changes in how consumers behave and manage their money.
It's always changing.
Fintech is a dynamic world.
It is.
Where change is the only constant.
So true.
So keep learning, keep exploring, and keep asking questions.
Good advice.
That's the key to navigating the exciting and ever-evolving world of investing.
For sure.
Until next time.